Welcome to the Grow with Purpose podcast. This is the Axiom podcast. It used to be the Axiom podcast. Now it's Grow with Purpose, where we talk about what happens in the field when Axiom advisors are out there working with businesses to help them grow with purpose. That's why we changed the name of the podcast a few episodes ago. And we also get to talk with some of those business owners on the podcast. And today we're doing that, but there's a little bit of a twist on it. Today, I'm here with JoAnna Kelso. So, JoAnna, welcome to Grow with Purpose.
Thank you so much for having me. I'm very excited to be here. I'm very excited to be a part of the team and just to see what Axiom is doing with clients and really to make a big difference in the industry.
So, you kind of fit the mold because you're in that business owner, type role that we like to interview, but you're special. You're a little bit different because not only are you business leadership and the president of a company called Axis Outsourced Accounting, you're also a colleague of mine
Right.
because Axis and Axiom are sister companies. And so I'm super excited to have you here, but full disclosure, this is not the first time we've talked, not even the second time we've talked. We talk quite a bit because we're
Yeah.
running a company together.
Right.
And I just want to say how happy I am to have you on board. It took us a year and a half to find you. And when we did, it was worth the wait. So we're excited to have you.
Well, I appreciate that. I feel like it's taken me a lifetime to find to be found by you, and I'm so thrilled that this is the culmination of a lot of hard work that I've put into my knowledge base. But it just feels like home, and I'm very glad to be a part of the team.
Great. Well, you've made it home. I feel like I'm in your house, which is awesome. I mean, that's so great. I was saying to somebody the other day, it's really cool to have somebody on the team who sees the big picture and is casting vision and who is also taking care of all the small details. And so I'm like, I could get used to this. This is amazing. So we're going to talk today about accounting.
Yeah.
It's probably, if we were to pick like one topic that every business has to deal with, there's some that would not fit the bill, like you say, marketing. Well, I've dealt with businesses in the past that really don't have to market. They're contractors. They're
Right.
taking orders. They're not really doing that. If you said,
Mhm.
OSHA standards, well, there's accounting firms really aren't that concerned with OSHA standards, nor are
Right.
legal firms, so. But accounting, every single business has to deal with it. Whether you're
Absolutely.
mom and pop doing paper ledgers, which I don't know if anybody does anymore, or you're 60 or 100 million or billion-dollar company, accounting. I don't think I came up with this term, but I've described it for a long time as the language of business. It's the language
Yeah.
of business operations and business process and business success or business failure. And
Right.
so it seems like something that every business needs. But one of the things that we're going to do three parts in this episode, or the three episodes in this series,
Mhm.
and talk about a range of topics. But what we want to focus on today is really this idea of clean financials. What does it mean to have clean financials? And when we talk about a business that's probably in the anywhere from just under $1 million to $2 million space, that's
Mhm.
a pretty big issue
Yeah.
for a lot of reasons. But and I'm sure we'll get into some of those. But if you're talking to a business owner
Mhm.
and you're talking about, let's say you're getting into a conversation with a new prospect, somebody who thinks they might be a good fit for Axis, what are some of the things you hear from owners who don't have clean financials? What are the most common things that you hear them say?
Yeah, well, I love that you called it the language of business, because that's accounting and your financials. That is where every aspect of your business is touched. There's going to be some people on your team that are going to deal with your customers. There's going to be some people on your team that are going to deal with your vendors. There are going to be some people on your team that are dealing with day-to-day operations. But then when you get to financials, all three of those converge, and everything is all in one place, and it's all encompassing. So if you do not have clean financials, when anybody comes to you from your team that's dealing with your vendors, or your team that's dealing with your customers, your team that's dealing with your day-to-day operations, and maybe that's you, it may be you
Right.
doing all three of those things. But when you're trying to figure out next steps or how to deal with that vendor or that customer or your operations, you really can't do that with confidence unless you have clean financials. And what clean financials mean are really consistent financials, because you could actually have everything reconciled from June already, and you can have everything recorded into your accounting software. But if there have been inconsistencies from month to month and how things have been categorized from month to month, when you look at June, you may think, oh, well, I can spend more money in this category, or I need to spend less money in this category. And actually, that could be telling you a false story. So, clean financials are actually just consistent. You need to know actually how much money is owed to me, and not that I've left some issue lingering. How much money do I actually owe out to my vendors, that I just haven't recorded properly? And, that consistent categorization of your expenses from month to month, and that's going to lead you to be able to make confident decisions, strategic decisions about, this is where we're at in our business right now. Let's look at where we've spent some money and where we need to dial some of that back. Where do we need to spend more? If this is working for us, we have it in the budget to spend more. So clean financials really come from consistency.
Yeah, that's a great point. I think the consistency is something that a lot of times the person who's charged with accounting in a smaller business, it may not even be a full-time job, right? So they
Right.
go, well, you know, we can use that person to maybe answer the phone some of the time, which is a terrible idea. If anybody's listening
Absolutely.
and you got somebody trying to run payroll part of the day and answer the phone part of the day,
Oh,
that's a recipe for disaster.
nightmare.
But the point is, a lot of times they are charged because here's the thing: these are conscientious people. They're
Hmm.
detail oriented. They
Yeah.
understand systems process. They're pretty freaking smart. So
Hmm.
you go, I've got this great resource, and I need them for maybe it's big, maybe it's 30 hours a week, maybe it's 20 hours, maybe it's 10 hours. But the point is, you're like, I want to put this resource to the best use possible, and unfortunately there's not enough work right now, so I'll have them do these other things. Well, those other things tend to be that they can get pulled them into the fires that have to be put out, the urgent
Yes.
things, the
Urgent. Yeah.
calls that have to be returned. So what slips? Invoicing slips, payables
Yes.
slip. Maybe we're getting the bills paid. Maybe I got to pay it with the credit card because that's how we pay it. I need to make sure that gets done today. But you're like, it's paid, and when I pull the credit card statement down, then the QuickBooks will be updated or the accounting
Mm.
software will be updated. And you have these swings where the things are really tight, maybe once every 60 days or once every 90 days. And to your point, the lack of consistency there means, well, my books are as good as they are determining when I look at them. And that's
Right.
going to change every day or every
Yes.
month or every quarter. When you hear business owners, if you're talking to them about these issues, what are the emotions that are coming out from them? What do you sense they're feeling because there is a lack of consistency?
Well, it's usually frustration. And typically, when you start talking about accounting, a lot of people consider it a data entry job.
Mm.
And they don't realize the knowledge base that really has to really be the foundation of that data entry. Yes, a lot of what I do is data entry, but I am drawing on wells of knowledge, and I know how important each one of those entries are. And so the frustration that you may hear is, I don't understand, why my financials aren't clean or consistent, because it's a data entry position, and I don't really understand what more I need. And that frustration will come out whenever they are, trying to get a loan at a bank,
Mm.
or trying to see, actually how much is owed by vendors or customers. I don't understand how this is not being entered. But if you do not have someone that is consistently looking at your books every single week, and making sure that things are categorized consistently and cleanly, then you are going to run into that frustration every single time. Now, most business owners, do understand that it's not just strictly data entry, that you do have to have some knowledge behind it. But I don't think that most business owners appreciate how intricate these things are, and how um, there are times that a data entry mistake may not affect the bottom line, but then at the end of the year, you look back and you think, I've made some crucial financial decisions based on incorrect information.
Mm.
And your bottom line stayed the same all throughout the year. Your profit looked the same, or your loss looked the same all throughout the year. But because things weren't categorized correctly, you actually made a critical error at the end of the year. So, the a frustration that I hear often is, I don't understand why I don't know how much money I've actually made at this point.
Mm. Easy to understand the frustration. And
Yeah.
it's interesting. You talk about the well of knowledge. Simple example, something as simple as an insurance premium that's not financed. And so there's one lump sum, or property tax bill in
Yeah.
Florida. I don't know where, you're out of state.
Yeah.
But in Florida, we accrue property taxes in arrears, which means my property tax bill started in January, but it doesn't have to get
Yeah.
paid until November.
Right.
And so if I have a 2 million or a 3 million or a $4 million piece of property
Mhm.
that my business is operating out of, and I have a 60 or a $70,000 bill show up in November, I
Yeah.
should have been taking about $5,000 of that a month, putting
Right.
that in. And so, but that requires an understanding of
Mhm.
prepaids and how to book
Yes.
those, and making sure that we're accounting for our property tax that has to be paid in November and January and February and March
Right.
and April, because that tax benefits the entire year. Well, I
Right.
don't know if many business owners say it benefits the year, but it has,
It affects.
yeah, it
It affects
affects,
the whole
yeah, it
year.
affects the year. Well,
That same thing with payroll taxes. There's going to be things that are paid quarterly and annually, and if you have not been accounting for that as your payroll happens, then you're going to all of a sudden see these spikes in financials that are not accurate spikes,
mhm,
because they should have been recorded as a liability that you owe. And so that should have been in front of your face every single month when you looked at your financials. Those types of things, if you, if you feel like, oh, a data entry person that, is also answering my phones can handle this for me, you're probably going to continuously feel that frustration.
yeah. When they are experiencing that frustration, let's say like the baseline is, yeah, I need to know how much money I'm going to make. But I would say
Mhm.
that's kind of like table stakes. Like
Yeah.
that's square one for them. I need to understand how
Yeah.
much money I made. What do they feel like they're missing out on above that? What is it that they're like, maybe they've just been conditioned. They're like, well, I'll never have that in my wildest dreams, so I've just forgot, I've given up on it. But
Mm.
what do they feel like they should be getting above and beyond just knowing how much money they made?
They should be able to go to their accounting person and say, I want to purchase a piece of equipment. Should I pay for this with cash, or should I finance it? And there should be pros and cons to each of those, and they should be based in the financials. It should say, right now, we have this accrual that we're working towards because you have a large property tax bill coming up, but here it is on your financials. This is a liability that we're accruing for you. So they should be able to answer those questions for you. Should you finance a large piece of equipment, or should you pay cash outright? They should be able to answer questions of, how much money do I need to have set aside so that way I have my expenses covered for the next 3 months, because the next 3 months are our slow time in business.
Hmm.
So they should be able to go to their accounting person at any time and say, help me with the trend of my business, and tell me what is the best strategic move for this thing that I need to do. Do I need to, keep my cash strong right now? Do I need to set aside extra for the next couple of months? And if you don't have someone who is looking at your finances weekly and getting all of these things categorized correctly and accrued correctly, even if you're doing cash basis, there's still some accruals that happen. And if these things are not accounted for correctly, then you are missing out on making decisions based on facts, based on your actual accounting trends, your business trends, versus just what a lot of business owners do is how they feel at the moment. Do I feel like taking on a little bit of extra debt, but I'm scared right now,
Yeah.
so I'm just going to pay cash for this piece of equipment and then 2 months later regret that cash purchase? So, all of those, you should be able to run your business based on facts, backed by your accounting person versus your feeling how you are at that moment.
Yeah. This is where I was just thinking, you know, I haven't been in the weeds with business owners on this type of stuff for a long time. Uh, I'll say definitely like pre 2007. I say 2007 because that number sticks out because I heard a while ago that's when the iPhone got released, right? And
Oh,
so I can imagine the way that most cash, because back when I was doing this, most cash decisions or cash expenditure decisions would be like, let me log into the bank right now and see what it shows as
hmm
my balance. Okay, I can go to
yeah,
the Ford dealership and get the next truck, a service truck
right.
that we need. Now it's even worse because they could be driving by the Ford dealership on their way, back from lunch, pull out their
hmm
phone, look at the balance there and be like, oh yeah, let me just swing by and spend some money. Not knowing,
Yep,
to your point, there's a $60,000 property tax bill that's got to
right,
get paid tomorrow or
right.
an insurance payment that's due. So, I empathize with the predicament that they're in. How long does it take them to get comfortable with the fact that, okay, now I know what's happening in the business and I should expect that type of insight from somebody who's keeping those records and is always on top of them? Is it, I would say maybe it happens pretty quickly, but do you have to kind of train them up what to expect to be asking or looking for insight on?
I think the biggest hurdle there is that business owners are used to just running their business without having a trusted partner,
Mhm.
without having someone who can help them put on the brakes. And I'm not saying put on the brakes, I'm saying help them put on the brakes.
No, good
Um,
distinction. Yeah.
yeah, it's like because they have to be willing to listen, and most business owners relegate their accounting person to being a reactive bookkeeper rather than a proactive accounting partner. And so they walk in and they hand them the paperwork from the Ford dealership and say, "I just purchased this truck." And the accounting person is going, did you forget about such and such and such and such?
Hmm.
So, if I think if you can take the one horse, I'm going to do it all myself mentality out of it and realize that with a trusted partner who's not trying to keep you from spending money, who is not trying to keep you from having a new
Wait,
truck.
wait, wait. I just want to be clear. Sometimes that's exactly what they need
Well,
is somebody but I take your point. It's very
yeah.
well made.
Yeah, your accounting person should never say to you, "No, you're not allowed to take a family vacation this year." That's not our job.
Right.
Our job really is we should be a trusted advisor that can say to you, hey, interest rates are low enough right now. We've got some clean financials. Let's finance that vehicle because we want to make sure that we have everything set aside for, this slow time that's coming up or these other accruals that I've been tracking for you. Here, instead of, paying cash for it, let's just do a large down payment and then finance the rest. And then in 3 months, if that slow time is not as slow as we thought, let's pay it off early.
Mm.
So it's not that your accounting person is going to say, I know how to spend the money and I'm not going to listen. It should be a conversation. It should be a trusted partnership. And it has to go both ways. The business owner has to be able and willing to go to that accounting person and say, I know that you're looking at my finances every day. I appreciate that about you. And so, therefore, I'm going to ask you these questions and I'm going to take a breath and I'm going to think about it. And I'm not going to think about that you're trying to restrict me, that you're
Mhm.
trying to tell me how to run my business. I'm going to actually trust your advice. And it has to go both ways. So, the accounting person cannot be upset and have an attitude when the business owner doesn't take that advice and because honestly, I have seen business owners that know their numbers in their heads so very well
Yeah,
that they will
absolutely.
tell you what their bottom line is going to be.
Hmm.
And when you're finished with all the accounting, it's exactly what they said.
Yeah.
So a lot of business owners really do know that. So it's a two-way street. The accounting person really needs to understand that the business owner's been doing this a long time. They know the seasons, they know the trends. But then the business owner also needs to trust their accounting advisor enough to know that with that two-way street, both of them have the same interest in mind.
Yeah, that's great. You and I have talked, we're just talking about this idea of accounting emotional intelligence, which we
Yeah.
joked we might trademark that because, but I think you're so insightful. Business owners, they're made 100 different ways. Like I've met some of those that you talked about that know all the numbers in their head, and it doesn't really matter what I produce on a financial statement. It's going to be within a couple percentage points of
Yeah.
what they think it's going to be. And so for them, being able to do that mental calculus is one of their competitive advantages. And they tend to
Mhm.
be in, capital intensive industries or long sales lead times or long delivery lead times where they have to constantly be juggling, okay, this cash is going to come in here, this payment's going to be due
Right.
there, and they've just become brilliant at it. I think and then you've got the other end of the spectrum, business owners who maybe probably the most common one I see is like they're just very sales focused. They are
Mhm.
the sales horsepower behind the business, and they're depending on somebody else to manage all the operations. And sometimes, they get so hyped about the sale, they sell something that's going to put us in a real cash crunch, either
Right.
because the discount or the margin that they quoted or the way that they structured the payments. And they're excited about the sale, and they come back to the office, and you're like, oh my gosh, you did what? And
Yep.
it's you don't want to be the wet blanket,
Mhm.
but the best relationship is that symbiosis that you're talking about, where each appreciates what the other brings to the table. And I
Right.
loved what you said about the person on the accounting side, the financial mind in the business, can't get upset when their advice isn't taken. And I've seen
Right.
that a lot. And
Mhm.
it's really unfortunate. And it seems to be a lack of appreciation for just how much is going on in this business owner's world. And
Right.
in the finance space, while we see everything that happens in the business, we're often seeing a pretty narrow spectrum of the day-to-day activity that business owner is
Absolutely.
responsible for. So it goes a long way to just have a lot of empathy for the business owner and saying, "Hey,
Mhm.
I get it, but here's what I would ask. Like, you keep all the grand picture stuff in your head and allow me to backfill the details and check in with you, and let's compare the picture that you have in your head with the one that I have in the books, and make
Sure.
sure that um, that one, nothing's getting missed, but two, there's probably some actionable information here in the detail that would really help you with the future big picture. I know you
Right.
have a great idea of what big picture, but I can, if you, and I guess too, the other thing is those conversations with the financial mind in the business about what's going on in the business owner's head about the future, because
Mhm.
a lot of times the entrepreneurs tend to be growth minded. Growth
Yeah.
requires capital. Growth requires maybe a different method of reporting something. Maybe we
Mhm.
need to go to a full accrual or a percentage
Mhm.
completion basis because they're going to start
Mhm.
selling multi-month contracts or multi-year
Right.
contracts. And that communication is really, I think, undervalued, but it's also understandable when you have the starting point where we started this podcast, where it's like, well, I'm not even getting timely financials, or I'm not even
Right.
getting consistency, and you're painting this rosy picture. It doesn't even seem like I can see around the next curve, much
Mhm.
less toward the horizon.
Yeah. One, the trusted part of that trusted advisor is the fact that you are fulfilling what they need from you. And that is, clean financials where we started, consistent financials. And when you have somebody that is delivering that to you as a business owner, you need to say, they are actually delivering to me the numbers that I need, the financials that I need. So I do trust that they do know my business. And, if as the accounting advisor, if you can go in with a plan A, B, and C, like we just talked about, pay cash for the vehicle or pay a down payment and pay it off later, if you can go in with those plans and have your backup for each one of those things and say, I actually do have your financials in order, that just like we talked about last month, we're strong cash right now, but we've got a slow time coming, or those types of things, that's going to make a huge difference.
Yeah, the
coming from
confident
that place of, yeah,
the
confidence,
confidence
exactly.
piece is huge. The credibility and just
Yeah,
the, I really do have an advisor, not just
yeah,
to your point earlier, somebody who's doing data entry for me.
yeah, yeah.
Well, let's touch quickly on like what's the cost that they're really paying by not having clean financials. I've got one in mind, but I'm curious to hear what your thoughts are on what's it costing most business owners not to have clean financials.
I think there's two things that immediately come to mind for me. One is if that business owner is seeking out any kind of loan for growth, maybe a line of credit, they may pay a much higher interest
Mm,
rate because
yeah.
their financials are not strong. And it could be that their business is strong, but it's just not shown on the financials. And banks, they're not going to take a business owner's word by saying, "Hey, got this really strong business." They're going to say, "Can you show me your financials?" So you might get a much worse offer from a financial institution than you would if your financials actually reflected the state of your business truly. And then the other thing is, I think that business owners often make critical errors in their decisions because they looked at their AR aging report and like, oh, I have all of this money coming in this month, but they didn't, talk to their financial advisor and see, hey, the trend is that our aging actually goes out 60 or 90 days, before a lot of our customers pay. And so then you make this critical error and then you're scrambling for payroll or you're scrambling for your loan payments. So, if you do not have your financials consistently delivered to you and accurately delivered to you, you can make some really critical decisions. And then it may cost you, like I said, at your financial institution as well.
Yeah, I think we're going to talk more about this later, but that's where, when we set up Access, one of the things that we said is if all we're going to do is deliver monthly financial statements, we're not doing it. It doesn't,
Right.
that's, and the simple reason is something you just alluded to. Are business owners making decisions once a month? And the truth is they're
Right.
not, but
Right.
if every week you've got accurate numbers, you know where your aging's at, you know where your payables
Mhm.
are at, you know where your cash is at, then now you can, maybe you did have a business owner who was unwilling to make decisions without that information, and they're having to wait at best every 30 days, but in all likelihood
Yeah.
every 45 to 60 days to make
Right.
those decisions. And now that business owner can make those decisions once a week, you've just 4x, 6x, 8x the velocity at which decisions can be made and progress can be made in the
Absolutely.
business. One of the things that we were talking about with a bunch of business owners this past week in Axiom was the price that not having clean financials um, levies on a business exit, and the fact that if you do want to sell your business one day, it's not like get my financials in order today to sell my business next month, because
Okay.
that potential buyer, whether it's a private equity firm or a strategic buyer in terms of a competitor, or maybe just your key employees are going to buy the business from you, they want to
Mhm.
see a track record of 2 or 3 years of clean financials.
Absolutely.
And
Yeah.
if they don't, I can guarantee you the first thing that they're going to negotiate down is their purchase price, because they
Yeah.
don't want to take the risk. So having
Yeah.
clean financials, I liked what you said better, but my example is more of an edge case for somebody who's wanting to sell the business and it's going to be years out. But what you were saying in terms of decision making ability and the cost of things like financing, I think your second example is probably the higher cost, because
Mm.
the cost of making a bad decision that could imperil the cash of the company and
Yeah.
potentially the company itself.
Yeah.
The cost of paying an extra couple of points on your auto loan pales in comparison to the risk you could be putting your business in if you're just making bad decisions on bad information or
Absolutely.
non-existent information.
Yeah, and if you have, maybe right now your accounting is outsourced, and once a month they're going in and just hammering out your financials from the month before. The issue that you're going to run into is, let's say that they say, "Hey, we're going to deliver your financials by July 20th for June." Well, then they're going to start on them July 15th. And then they're going to be asking you questions about what happened on June 1st, and you're
Jeez.
trying to decide what's going to happen on August 1st.
I can't remember what
And
I had for lunch yesterday.
exactly, exactly. And if you have an off-cycle credit card, they may be asking you about transactions in May,
Yeah.
and these are things that you cannot wait until July 20th to get financials from June that may not be clean or consistent because you don't remember
Right.
those things that happened at early June.
Yeah.
So yeah, having weekly, somebody touching your books weekly and asking you questions in a timely manner, and then delivering to you numbers that are accurate, so that way you have all of the information in front of you. And then hopefully you have a business coach, or like Axiom can take your numbers and they can advise you on those things that you need to move your business forward. But both, either an advisor or the business owner, they're both hampered waiting on somebody that is not doing the accounting timely.
Yeah. It's a great point. Well, before we wrap up this first episode in our series, I do want to give the listeners a chance to get to know you. We certainly have, and it's been an extraordinary pleasure. And you are a star performer. I mean, the
Ugh.
amount of work that you have put in, the things that you're doing behind the scenes. Cameron and I both just kind of shake our heads like, "Holy cow, that got done, that quickly." So, but who is JoAnna Kelso?
Well, I always thought I would be a teacher.
Interesting.
And yeah, so I have a bachelor's and a master's in education. Actually, and I also have a specialist degree. It's something that some colleges offer in education. Even while I was doing bookkeeping, which I have done for 30 years, I just always, thought, well, I'll do teaching, I'll do teaching. And I was, late in life getting my degrees. I was well into my 30s by the time I got my master's. But I have such a passion for bookkeeping and accounting and helping small business owners. And I don't know where that comes from. My parents actually always worked for other people. There wasn't any kind of story that led me to it. It's just something that I fell into and found that I did have a passion for it. And so, a lot of people will joke about me having a degree in education, and my children actually say that my degrees hanging on the wall are the most expensive decorations in our home, because that's what they are, they're decor. But I find that a background in education, and then being a resource of bookkeeping for a small business owner, ties together beautifully,
Yeah.
because I don't come in to any situation and talk like a CPA does. That's not my strength, that's not my background. I come in really, and I have the heart of a teacher and the heart of a coach, and but then I have this knowledge base of accounting. And when I tie the two together, I I'm not trying to overstate things here, but I
Mhm.
feel like I can explain things well to business owners,
Yeah.
and can talk about their bookkeeping on a level where they can understand. And maybe it's because my degree is in mid-level education, so I talk like a junior high teacher. Uh, but yeah, that's really where my heart is. It's always been in with small business owners, and I did own my own bookkeeping service for many years. Loved it and enjoyed working with small business owners in all kinds of industries. There was construction, there was nonprofits, there were lots of different industries that I worked with. So this really is the culmination of a lot of hard work that I've put in over the course of my career. And this company and working with you and with Cameron and the other people on the team is like a reward for the hard work that I've put in for all these years, because this really has been such a rewarding experience. And already the clients that we've onboarded, it's amazing how immediately we're all so friendly and trusting of each other, because that relationship has already been built with Axiom as well. And so, this is a great opportunity for me, and I really do appreciate the fact that y'all brought me on board, and I'm excited, very excited to be here and grow this with you.
Well, you're driving the ship, so we're on board with you, not the other way around. Um, tell us a little bit about Axis and this team that you're building and the company that you're building over there.
Yeah. Well, we really want to do things differently. We want it to be, yes, we are an outsourced accounting service, but that doesn't mean that our communication is outsourced. That doesn't mean that we're unavailable. It means that we are going to be your trusted advisor. We're going to touch your books weekly. When you onboard with us, it's going to take 3 to 4 weeks to kind of get everything situated and in a groove. But after that initial onboarding phase, you're going to have weekly financials from us. You're going to have a dashboard that you can look at that's going to immediately show you your accounts payable, your accounts receivable. There are tiers that you can choose as your business is growing. And you can actually have us go all the way up to where we are the ones interacting with your customers and with your vendors. So that way you can focus on what you do best, which is running your business. I have yet to meet an HVAC contractor that said, I started an HVAC business because I love doing bookkeeping. It just doesn't happen.
Well, I've
So
yet to meet an HVAC contractor's spouse who said, I got married so that I could keep the books for this HVAC business. But that's what happens a lot of times. And I'm
absolutely.
not
Absolutely.
discriminating.
No.
HVAC, maybe not that industry, but I've seen other industries where the husband was the one keeping the books and others where the wife was keeping the books.
Yeah.
And neither one of them were particularly thrilled with their quote
No.
unquote career choice. So, yeah, I
Absolutely.
get it.
Yeah. And, some people say, oh, well, I can't afford outsourced accounting right now, but truly, you can't afford not to have trusted financials, a trusted advisor, somebody that's actually in your corner that you can go and rest knowing that when you log in and look at your dashboard, you have accurate numbers. You can't put a price on that, honestly.
Well, I'll say this. They're going to hear you can go and rest from JoAnna or one of JoAnna's team members. And then Cameron's going to pipe up from Axiom and say, get
Uh-huh.
off your butt. We got to get
Yeah.
out there and do things to grow this business because it's about freeing up your time for a higher and better use. Right. So
Absolutely.
that's awesome.
Yeah.
Well,
Yeah.
thanks. I'm looking forward to our next conversation.
Yeah.
This is the Grow with Purpose podcast. There's going to be a leadership guide that you can download that covers everything that JoAnna talked about in just 2 or 3 pages. So if you haven't yet, go to the website, download the leadership guide. We're going to ask for your email address there, not so we can spam you, but so that you can get future leadership guides automatically sent to you. So we want you to listen to the podcast every week. We want you to rate us on Apple Podcasts or Spotify or wherever you listen to podcasts so more people can get the message out. But you'll get that leadership guide in your inbox and remind you, oh, there's a podcast on this topic that sounds interesting to me. And you can go in kind of already somewhat prepared for what you're going to hear. And as always, this stuff is more valuable when you listen to it with a mind toward what am I going to do next. So with that in mind, if you're interested in talking to JoAnna about Axis Outsourced, there's going to be a link to that in the show notes where you can book a link on her calendar, a booking link so you can get on her calendar and just have a conversation about what outsourced accounting might look like for your business and being able to free you up to do the things that only you can do in the business. At Axiom, that's our focus with CEOs. What's the thing that they and only they can do in the business? That's where we want them spending 80% of their time. And if accounting, managing accountants, managing bookkeepers, if it's not working for you, then we should have a conversation, or not we. You and JoAnna should have a conversation.
Yeah. Yeah.
And I trust that you got to know her a little bit on this podcast, and that'll be easier to do going forward. So until next time, thank you for joining us.
Thanks for having me.